On June 12, the largest IPO in history debuts, Elon Musk asking for $75 billion. SpaceX isn't a smartphone. It's an orbital layer, and Musk's betting it's the backbone of the AI economy. I'm David, and I'm covering this because the Pentagon already depends on it. So the question isn't just markets, it's geopolitics. Is this moat worth nearly $2 trillion? On Friday, June 12, 2026, SpaceX will list on the Nasdaq under the ticker SPCX. The price is fixed at $25 a share. The raise, roughly $75 billion. It is the biggest stock market debut in history. For scale, Saudi Aramco's 2019 listing raised about $29.4 billion. SpaceX's deal is 2.5 times bigger. Fortune's reporting on the prospectus says 555.6 million Class A shares are on offer, with underwriters holding an option for 83 million more, another $11.2 billion if exercised. The headline number everyone keeps repeating is $1.77 trillion. That is the company's overall valuation, if the offering prices where the roadshow says it will. Here's what makes the deal strange. As recently as July 2025, SpaceX was worth about $400 billion in a tender offer. By December, an insider share sale lifted it to $800 billion. In 6 months, underwriters more than doubled it again. Bloomberg has floated scenarios where it clears $2 trillion on debut. Morningstar has a sharply different view, and we will get to that because it tells you exactly what the public market is being asked to swallow. The question for every viewer with a retirement account is simple. Is this the deal of the decade, or the top of a bubble you are about to inherit? To answer that, look at what is actually generating cash inside SpaceX. The answer is one thing: Starlink. The IPO filing, reported by CNBC on May 25, finally gave the public audited numbers. In 2025, the connectivity unit, overwhelmingly Starlink, pulled in $11.39 billion in revenue. That is 61% of every dollar SpaceX earned. It was the only profitable division in the entire company. Operating income from Starlink alone hit $442 billion. Falcon launches, government contracts, Starship development, none of it made money. Starlink did. Here is how the machine works. SpaceX builds the satellites, launches them on its own rockets at near cost, and rents bandwidth to consumers and governments through a low-friction dish. Every Falcon 9 flight that puts another batch in orbit lowers the cost per subscriber served. That vertical stack, one company makes the rocket, the satellite, and the service, is something no telecom on Earth can replicate. The catch is the prospectus also shows revenue per subscriber falling. The information, citing the draft filing, reports the average Starlink customer paid about $81 a month in 2025, down roughly 18% from 2023, even as the customer base quadrupled. SpaceX's trading price for scale. That trade only works if the scale shows up. And the next number is the one underwriters are betting the trillion-dollar valuation on. That number is 25 million. By the end of December 2026, SpaceX leadership says Starlink will have 25 million active subscribers. SDX Central reported the target in April, tied to the rollout of the company's Gen 2 satellites, which carry roughly 100 times more data capacity than the original fleet. Walk the timeline. In February 2026, Starlink crossed 10 million customers for the first time. By the end of March, it sat at 10.3 million. In 9 months, SpaceX needs to add nearly 15 million net new subscribers, more than it added in the entire decade before. The plan rests on 3 things: Gen 2 capacity, which lets each satellite serve far more users in the same patch of sky; aggressive expansion into low-income geographies with no fixed-line broadband to compete with; and the quieter shift, monetizing the existing base harder. In May 2026, coinciding with the IPO filing, SpaceX raised U.S. residential prices by up to $10 a month. That is the company telling investors the days of growth at any cost are over. We have the audience, now we squeeze it. If 25 million holds, Starlink prints more cash than most telecoms on Earth. If it misses, the $1.77 trillion valuation starts to wobble. And there is one reason analysts think it just might hold. That reason is sitting in orbit right now. As of June 1st, astronomer Jonathan McDowell counted 10,413 Starlink satellites circling Earth. Amazon's competing constellation, now rebranded Amazon Leo, has around 250, roughly 50 times the lead. It took SpaceX a decade to build that stack. No competitor catches up on this timeline. That is the moat the IPO is selling. And yet, Morningstar, reported by CNBC on June 3rd, puts SpaceX's fair value at $780 billion. The IPO targets $1.77 trillion, a $990 billion gap. Morningstar flags that the IPO price implies 67 times sales, 3 times Nvidia's multiple. The market is being asked to pay full price today for a future that has not happened yet. There is another layer to the price: control. The S1 lays out a dual-class equity structure straight out of Silicon Valley's most aggressive founder playbook. Public investors buy Class A shares, 1 vote each. Musk and insiders hold Class B supervoting shares carrying 10 votes apiece. The math: Musk owns roughly 42% of the economic equity, but commands 82.4% of the voting power. He picks the board, he sets strategy. Removal is structurally impossible. Governance commentators sum it up bluntly: only Elon Musk can fire Elon Musk. The filing then deepens the lock. 2 performance-based stock grants would hand Musk up to 200 million more supervoting shares, tied to a $7.5 trillion valuation milestone and a 1 million-person Mars colony. A further 64 million supervoting shares are tied to commissioning space-based data centers. On May 14, 2026, New York City Comptroller Brad Lander and New York State Comptroller Thomas DiNapoli sent a joint letter pushing back on the structure, on behalf of pension funds that may hold the stock whether they want to or not. Here is the catch. SpaceX is large enough that major indices will almost certainly include SPCX. Passive money has no choice. Retirement savers across America will own a piece of a company where they have almost no say. The bigger question, then, is what those savers are actually buying. What they are buying is Starlink. That is the answer. The prospectus quietly admits. The $442 billion in operating income comes from one division. Everything else, SpaceX shows the public. The Starship test launches, the lunar contracts, the talk of orbital data centers either burns cash or has not been built yet. Starship is the biggest cost center in the company. The largest rocket ever flown, fully reusable in theory, designed to carry 100 tons to orbit. It is also nowhere near commercial operation. Every test flight costs hundreds of millions. SpaceX needs Starship to work for the Mars plan, but for now, it consumes the cash Starlink generates. Then there are the orbital data centers. Musk has pitched putting AI compute in low Earth orbit, powered by solar, cooled by space itself. The S1 ties some of his performance stock grants to commissioning them. The technology is unproven. The economics are speculative. So the trade looks like this. You pay $1.77 trillion. You get one cash-printing satellite internet business, plus expensive bets on Mars and on orbital AI that may or may not pay off in the next decade. Morningstar's $780 billion. That is Starlink on conservative math. The other $990 billion is faith. Faith in one man, in one direction with no exit. That faith reaches further than Wall Street. The U.S. military is now dependent on SpaceX. Falcon 9 and Falcon Heavy launched the bulk of America's national security payloads. Spy satellites, missile warning systems, the National Reconnaissance Office's most classified hardware. Starshield, the military variant of Starlink, gives the Pentagon a hardened communications layer no other vendor on Earth can match. The Defense Department has spent years deepening that reliance because there was no realistic alternative, and now that supplier is going public. As a private company, SpaceX could absorb losses on a national security mission, delay a commercial launch for a Pentagon priority, or run a program at razor-thin margins because Musk decided strategic importance trumped quarterly profit. Public companies cannot operate that way. The moment SpaceX trades, every decision gets filtered through shareholder pressure. Quarterly earnings calls, activists pushing for buybacks, lawsuits when margins slip. The Pentagon now has a critical supplier, whose CEO answers to public market analysts, who will not have signed any clearance forms. There is also the Musk question. Washington has tried to avoid asking out loud. He has clashed publicly with senior officials. He has briefly cut Starlink service over Ukraine, as the chairman of a publicly traded company that holds a near monopoly on American space access. That is a national security problem the country has not figured out how to manage. All of that lands on Thursday morning, June 12, when the opening bell rings on the Nasdaq. The price will move fast. Within minutes, the market will deliver a verdict on whether $1.77 trillion is the floor or the ceiling. The read-throughs are immediate. Over at Nvidia, traders will be watching whether investors believe Musk's space AI compute thesis, the one that would make Starlink the substrate for orbital data centers. Amazon, Microsoft, and Google, the hyperscalers, have to recalculate what edge compute bidding against Starlink cost them in the next contract cycle. At the Pentagon, procurement officials read the share price as a referendum on how much leverage their largest space contractor now has. Pension fund managers, meanwhile, already know their index trackers cannot avoid SpaceX. Pull the threads together, and the picture is sharper than any single number. The IPO concentrates one man's control over America's only working orbital broadband network, the Pentagon's most critical launch vendor, and a thesis about AI in space that may or may not be real. Morningstar's $990 billion gap is more than a valuation argument. It is the price of believing all three at once. On June 12, the market votes. Whichever way it breaks, the era of SpaceX as Musk's private rocket company ends that morning, replaced by something the United States has never had before and does not yet know how to govern. June 12 will test whether markets believe Musk's orbital AI bet. I'm David. Subscribe for when markets and geopolitics collide.